Hi there, I'm Matthew Lester from the Rhodes Business School. Here's a little podcast to help you in the financing of your part-time studies, particularly if you earn while you learn. There's a little trick to this that not many people appreciate. Now, if you go to the movie Fame, there's that terrific line which goes, "They've got what it takes, but it's going to take everything they've got." Let's look at that in the context of continuing your studies once you've started working. Try this. You want to continue your career. You want to qualify further. So you want to graduate, then you want to start working, but that coincides with starting a home and a family. Then you want to commit yourself to an expensive postgraduate qualification, be that an MBA or any other qualification. These fees can range up to 50,000 Rand per annum, and then there are the extras. If you pay that yourself, you're going to pay it out of your after-tax income, which could absorb as much as 100,000 Rand of your pre-tax package. For many, that's a non-starter. So for many graduates who are wanting to pursue further education, the stark reality is that they may have what it takes, but it's going to cost more than they've got. So let's try again. Let's go and look at university finances. Some might know that when one looks at a university's finances, their money comes from student fees, yes, a large government subsidy component, and money that comes from donors. What few people realize is that there's an opportunity to bring a further party to the party. So what we're going to do is move everybody over to the right and add in National Treasury and SARS, because they have a package that's contained in the Income Tax Act. What this does is it says there's a special provision, section 10(1)(q) of the Income Tax Act, which deals with employer-provided bursaries. If student fees are paid by the student, then there's no tax efficiency at all. But section 10(1)(q) creates a different type of payment mechanism where the student fees are paid by the employer. Let's go into it in a little bit more detail. If an employer pays an employee's debt, that's a taxable fringe benefit. That doesn't help. But the section creates an exemption which says if the employer pays a bursary on behalf of an employee or a relative of an employee, then there are only exemptions if the employee earns below 250,000 Rand per annum, in which case you can pay a mere 10,000 Rand per annum bursary to an employee or relative that is studying below SAQA level 4, or 30,000 Rand per annum if the student is above SAQA level 4. But this rule doesn't apply to the employee. Section 10(1)(q) goes further and creates a separate set of rules for employees, which says the employer is entitled to pay the further study costs of an employee, and that is unlimited. So what are we trying to achieve? If you structure your continuing education into your employment package, you can do so on a tax-free basis, i.e. you're not paying your study fees out of after-tax income. So if your income was below 272,700 Rand per annum, you can get a discount amounting to 12,500 Rand per annum in tax saving on 50,000 Rands worth of tuition costs. And if you were fortunate enough to be earning over 673,101 Rand per annum, you would get a 20,000 Rand per annum discount on your tuition costs, purely by getting your employer to pay the bill instead of you. So really what we are saying is that when it comes to the earn while you learn principle, student fees must be paid by the employer and not by the employee. This allows National Treasury to come to your assistance and provide that you are paying your fees effectively out of pre-tax income. There are a couple of other issues that need to be addressed. There are strings attached to the program. There has to be a commitment from the employee to the employer that they will remain employed with the employer post-qualification. This is not a total commitment. The bursary can always be paid back by another employer, but one has to take account of it. Then some argue that salary structuring is never permitted. That's not the case when it comes to postgraduate studies. This type of bursary can be salary sacrificed into your employment package. So here's the conclusion. There is a state subsidy available if you earn while you learn. It takes the form of a tax saving. What is important is that it takes the participation of your employer to claim it. You can't claim it in your own tax return. I'm Matthew Lester from the Rhodes Business School. Thank you for your attention.